If you live overseas and own a UK rental property, you sit in one of the most complex corners of landlord tax. And it's about to get busier. In the next few minutes, I'll explain the Non-Resident Landlord Scheme, how making tax digital affects you from April 2027, and the practical steps to take before then. First, who counts as a non-resident landlord? It's anyone who receives rent from UK property but is an UK tax resident. And residence is decided by the Statutory Residence Test, which looks at days in the UK, your connection here, and whether you have a home in the UK. It's fact-specific, not just where you mostly live. Typical non-resident landlords are British expats who kept a UK property, foreign nationals who invested in UK property, and people who immigrated but held on to a portfolio. Now, the scheme that's existed for years, the Non-Resident Landlord Scheme or NRLS. The default is that your UK letting agent or your tenant, if there's no agent, must deduct basic rate tax 20% from your rent before paying you and hand that to HMRC quarterly. Most non-resident landlords avoid that by applying to HMRC on Form NRL1 to receive their rent gross. Approval depends on your UK tax affairs being up to date. Once approved, you get the full rent and settle your tax through self-assessment or from 2027 through MTD. Here's the part that catches people out. Non-resident landlords are only temporarily exempt from MTD until April 2027. That exemption is automatic if your 2024-25 return included the residence pages. You don't apply for it. From April 2027, non-residents with UK qualifying income over £30,000 are mandated. From April 2028, the threshold drops to £20,000. There's one more wrinkle worth real money. If you have no UK national insurance number, you're permanently exempt because you can't even sign up. So, a non-resident with no NI number has double protection. One with an NI number loses the temporary exemption in 2027. And this is the big misconception. People assume MTD replaces the NRLS. It does not. They run side by side. From April 2027, a mandated non-resident landlord complies with both. The agent keeps withholding 20% or pays gross if you have NRL1 approval, and on top of that, you keep digital records, file 4 quarterly updates, and submit a final declaration. Think of it this way. The NRLS is how the tax gets collected, MTD is how it gets reported. Both apply. Where tax has been withheld, it's credited against your liability at the final declaration. Your quarterly updates just report gross income and expenses with no adjustment for the deduction. The practical hurdles are where non-resident clients really differ. You need your own government gateway credentials for the MTD sign-up, and creating or accessing a gateway account from abroad can be fiddly. Identity checks sometimes want UK documents, and overseas logins can get flagged. Many non-residents have no UK bank account, so there's no bank feed and the agent statement becomes your only source document. Time zones stretch out every approval and query, and you may have tax obligations in your country of residence too, usually resolved through a double tax treaty. None of this is insurmountable, but it takes longer than UK-based client. 3 common mistakes. 1. Assuming the MTD exemption is permanent. It isn't, for most. 2. Assuming MTD replaces the NRLS.
You must comply with both systems from April 2027.
3. Leaving government gateway access until the last minute, then discovering you can't get in from abroad. 5 things to do before April 2027. 1. Confirm whether you'll have a UK qualifying income over £30,000 on your 2025-26 return. That's what decides 2027 mandation. 2. Check your NI number status, because no NI number may mean permanent exemption. 3. Make sure your government gateway account is active and accessible from where you live. Fix it now, not in 2027. 4. Confirm your software handles UK property for non-residents and the NRLS credit. 5. Sort out how agent statement reach you or your accountant, and budget for the extra time the time zones and liaison take. Myth: I'm a non-resident, so I'm outside MTD and the NRLS sorts my tax. Reality: the MTD exemption is temporary for most, and from April 2027, you may have to run the NRLS and MTD together. Non-resident landlords have the most moving parts of any landlord type, so the time to prepare is now, not in 2027. RentalBuck supports non-resident clients with the same quarterly workflow as UK residents, agent statement imports, property level tracking alongside MTD. Start your free trial or book a demo if you manage non-resident landlords.